Okay, welcome back. There's just sort of I think, minute or so to go for the pre-open session. SGX is indicating, a 90-point higher start, 17,200 or so is where we should open up according to the SGX. We'll have the rates up, the pre-open rates up in just a bit from now. Mitesh and Sudarshan are with us with what they are making of things and their trades. Gentlemen, good morning. Good to have both of you here. Time for a bit of a bounce. Sudarshan, what do you think?
Good morning. See, it's quite possible we'll have a bounce. The Nifty should open now 17,100 because the SGX is talking about futures rates. But this bounce is not tradable. See, volatility is so high, there is no way to predict that this bounce will sustain. It will continue higher and higher throughout the day. So it's not worth entering. There are some decent and well-known measures of volatility. That is the VIX, historical volatility, average to range. All of these measures are at extreme levels. Once one or more of these measures start falling, that's a sign that volatility is coming down, and then we should enter the market. I don't think we'll get anything by entering and trading, haphazardly today. So best to avoid.
Okay, best to avoid this market. I guess that's some sane advice coming through because things could go either way, right? Mitesh, do you reckon that even if a pullback comes, it could be very shallow and the sell-on rally trade is something that could persist through the course of this week?
Good morning. I think eventually yes, but in the short term, we are very oversold. Yesterday, I talked about the fact that the targets of 17,000, 17,100 zone was met, and we had taken off our short positions. I think there is significant space on the upside because the moving averages are lagging, and the retracements also suggest that there could be slightly, a decent kind of a pullback. Though I don't want to be aggressively long on the index, but on stock side, we'll explore long positions. The first key test, I think, for the Nifty will come around the 17,280, 300 mark. So I think that's the target which I'm keeping for the bounce back. It could happen in a day or two. But I think, in case we start failing around that level, then I think we'll again go to the short side of the trade. So for the timing, maybe trading with a mild positive bias. Clearly, because one, we have taken, closer short positions. We have hit strong support levels and we are very, very oversold. So the bounce back is expected to be slightly stronger, maybe a day or two is what I think the index will do.
Sure. Well, that's exactly what the screen is saying right now. We've got the pre-open rates, the initial ones, and it seems to be a roaring pullback if you go and believe these rates for now. 250 points up on the Nifty, Infosys, SBI, ICICI Bank, Reliance. It's a complete stampede, green stampede on the screen. These are pre-open rates. Let's see how they settle and let's see the actual opening. But just to get back to the point, Mitesh, you were saying that you will be cautious on the index, but you're happy playing long in individual stocks. So let's get down to some of those ideas.
Yeah, so I think, so a lot of stocks in this correction have come to their medium-term support levels and are also showing signs of some reversals. So I've identified a few of them. REC is the first buy call. Keep a very tight stop at 115 half. Look for a target of 123. It's trading at a gap support. The overall structure is good. So this could bounce back. Disclaimer, I have it in my long-term portfolio. Deepak Nitrate is a buy with a stop at 1810 for targets of 1875. The third buy call is on BEL, Bharat Electronics. Here I would recommend buying with a stop at 91 for targets of 97. And UBL is the final buy call. Keep a stop below 1430 here, and a 1480, 1485 kind of a target can be looked at to begin with.
I don't think we're getting a 200-point gap up. It should settle down. It must settle down. And the problem with a big gap up is that it kind of removes the tradable opportunity because you start right there. Then what do you do? That's the point. But let's see. 17,224. By the way, if we open here, this is exactly yesterday's high. This is the level from where we sold off, and this is the level I put out. Once you trade consistently above it, you perhaps can look for some long opportunities. But with a 150-point gap straight off the bat, much easier to get a bit of a gap down. And if you have the view that things will get better, go long then rather than trying to chase a big open. Sudarshan is still with us with his specific trades on stock. Sudarshan, what do you have?
Yeah, but first, you're quite right, Prashant. Suppose it opens 200 points higher. Can the trader go back to yesterday and buy? That's not possible, which is what I said, that volatility will remain high. A 100-point dip after the open will be normal, but traders will be butchered. So be very careful. Now, Bajaj Auto is an intraday short. short selling should be done only intraday, stop above 3800. Bharti Airtel was coming in my list earlier. It's actually had an up day yesterday, which is quite nice. Buy, this is a positional buy. All buys are positional buys. Buy with a stop under 760. United Spirits are probably like UBL is now giving a base building formation. I think it's worth buying into. Keep it a positional buy with a stop under 734. And Bank Baroda is an intraday short. If you get a gap up, you might consider that, adjust your stop loss accordingly. Stop above 165.
So Darshan, hi, morning. You did mention Bharti Airtel. I wanted your views on the other stock, Reliance. There's some news on Reliance today. But what about the charts? It's underperformed the Nifty as well for so long. Do you see any immediate levels in sight? What's the trade on Reliance, if at all?
Reliance is a mirror image of the Nifty for most of the time. So just like the Nifty, Reliance is an excellent buying opportunity for people who are looking for investments and who say, okay, we want to buy on a dip. I don't have a view on the next few days.
Okay, all right. Let's thank our guests for joining in, our technical guests, and get back to the market pre-opening rates, which have settled higher. 100 points in the green. Whether this lasts, you never know. But Maruti is the big gainer in trade after its parent company Suzuki has raised stake marginally in the company. Of course, that has bolstered confidence in the stock. But the other big theme that we're talking about is in the telecom space. Jio has introduced new postpaid plans, and Reema's here to give us all the data on that. Reema, over to you.
Thanks so much for that. So Reliance Jio has announced new postpaid plans. So first, on the individual plans. Now they're saying the new subscribers can avail of an individual plan at a price of 299 rupees. This is higher than the current tariff plan of 199 rupees, which means effectively there is an increase for new subscribers who come on board after the 22nd of March. But it's still cheaper than peers who are offering entry-level individual plans starting at 399. But earlier, Bharti Airtel had a 100% premium over Reliance Jio's individual plans. Now the premium has come down to 33%. On the family plan, Reliance Jio has two offerings. One of them is a 696 rupee plan, effectively for a family of 4. Now, this is the cheapest available option, which is there right now for a family of 4, because peers start at 999. So, in that sense, they are being aggressive because they're trying to get that segment. But if you do a like-to-like comparisons, which means the offerings, if you do the offerings in terms of OTT subscription, in terms of the overall data, Reliance Jio has another plan which is almost 1,000 rupees, which is comparable to peers Bharti Airtel and Vodafone Idea. So it's a mixed bag in terms of aggression. But the question is, with these new offerings, can Reliance Jio make a dent in postpaid subscribers? CLSA says, postpaid subscribers are not very price sensitive, while Kotak says Reliance Jio's renewed aggression is surprising, and here they mean in the family plan with their offering of 696 rupees. It could delay the prospect of a tariff hike in the near term. However, they do not expect Reliance Jio to get aggressive in the larger prepaid data segment. Back to you.
Okay, thanks a lot for that. In fact, we're going to pose all of these questions to our next guest, Balaji Subramanian, the Vice President at IIFL Securities, joins in to give us his view. Balaji, do you believe that a tariff hike is going to get delayed? In any case, what was the timeline that you're looking at? And do you think Reliance can succeed in this whole postpaid plan that they've announced? And what about the stock itself? What's your view here?
Good morning. Thanks for having me on the show. So first of all, I would take those two separate questions. The first one being what happens to the postpaid market. I think what Jio has done is that they have raised tariffs for the standalone pack, especially the entry-level pack is up by almost 50%, and that kind of narrows the discount which it had versus Bharti. So in a way, that is positive for the postpaid ARPU or the postpaid revenue of the industry as a whole. But on the other hand, they are also offering a lot more value on their family packs. And the family packs, of course, if one doesn't want any of those OTT subscriptions, then the 696 rupee for a family of 4 is quite reasonably priced. As far as the postpaid sector itself is concerned, as you would have seen, Jio has been offering fairly attractive plans or significantly attractive plans versus peers for the last 2 odd years. And so far, the traction has been somewhat modest because postpaid subscribers are extremely sticky. They have a high degree of inertia, and they are not that price sensitive. So I think these new plans clearly suggest an attempt or a renewed attempt for Jio to again, take a crack at the postpaid segment. But having said that, one has to see as to how these plans really go about in terms of Jio's fortunes in the postpaid segment. And I think it also makes sense that they are trying to capitalize on the fact that they do have 5G, while Vodafone Idea is yet to roll out 5G. So, as we would have seen in the last few quarters, Vodafone Idea's postpaid additions also has been relatively healthy. So, maybe Jio thinks this as an opportune time to make some inroads in postpaid. Yeah.
Got your point, Balaji. Yes, perhaps they're taking aim at some of those Vodafone subscribers. I want to, turn the question around and now ask you how you're going to look at Bharti Airtel as a stock. A couple of things. Bharti, at their entry level, they have rolled out those tariff hikes in all 22 circles. Now we have this move coming in from Jio in postpaid. Do you expect Bharti to respond? I mean, I don't know. Till now, we were not at all thinking of any sort of price cuts in postpaid. It was all about taking price hikes. How would you look at Bharti, and what's the call on the stock?
See, any case, I was not expecting any postpaid tariff hikes by Bharti, because if you look at Bharti CEO Gopal Vittal's statement on the last earnings call, he was absolutely clear that at the current postpaid to prepaid price ratio, the kind of postpaid subscriber addition that Bharti has been seeing has been quite healthy, and he didn't want to upset that momentum. So I don't think a postpaid tariff hike by Bharti was on the cards in the near term, and I don't think that really changes. So whether Bharti adds a bit more value into their existing postpaid family plans, it remains to be seen. But anyways, I don't think it was the base case of the street to anticipate postpaid tariff hikes from Bharti.
Yeah. Okay. All right, Balaji, we'll leave it at that. Thanks a lot for joining in and giving us, your view on what's happening with the whole tariff war and the new postpaid plan from Reliance. By the way, the Adani Group stocks continue to be under pressure and pre-opening as well, despite the entire market rallying. The Nifty looks like it's going to open with big gains, but names like Adani Power continue to be under pressure. But LTI Mindtree is in focus. Reema's here to give us the latest on that. Reema, over to you.
Thanks so much for that. So LTI Mindtree held its investor day yesterday post-market hours, the first investor day after its merger with LTI Mindtree. It was held by the CEO Debashish Chatterjee, where he indicated that the integration is now completely over, and he reiterated that by FY27, the company will realize revenue synergies of $1 billion and a margin improvement of 200 basis points via the cost synergies. These numbers were known earlier in terms of the synergy benefits, but it was reiterated by the management. On the macros, they indicated that there is some caution at the boardroom level. Clients are talking about it, but their large deal pipeline continues to remain intact. It stands at $3.2 billion. 55% of the company's revenue is unaffected by the macros because it plays into customer experience, cloud, data, etc. So they're not too worried about that. On SVB, it was a client, but they get very little revenue from them. So again, not too worried on that front too. Back to you.
All right, Reema, thanks very much for that. Another space to watch out for could be the metal stocks, Tata Steel, Hindalco, and the entire pack. And I'll tell you why. It seems ages ago, but China reopening was the strongest theme. This in 2023, it's kind of taken a bit of a backseat. But I was just looking at the Jan to February data which has come through from China, and it indicates a solid rebound in China across the board. There are 3 or 4 sets of data, and we'll put that out a little later. But it's a solid rebound which has come through in China on macro indicators. The other one is Voltas. I don't know if we have the time to just quickly put the graphics up. I think there is a upgrade which has come through. okay, it's a management meeting, and they're basically indicating that room air conditioner sales have been pretty strong. Market share, of course, they've been losing market share, and the company is telling analysts in the analyst meet that they are expecting increase in market share. They're the largest in room air conditioners, I think around 20% or so. And they're expecting things to be on the up.
Price hikes in April. I remember a lot of these companies said that we won't do it in March, but come April, perhaps looking at the scorching summer.
With the way the heat is going, I think people can't do without, they can do without anything, but they can't do without an air conditioner, right? All right, that's the first tick on the Nifty, by the way. That's the opening rate. Looking pretty good, up 160 odd points. That's 1% up on the Nifty. The Bank Nifty is up about 1% as well. So there is a pullback that has come through. The first rate in terms of the mid-cap index is also well in the green. So 250 points higher on the mid-cap index. And the advance decline ratio is pretty healthy, well in favor of advances, almost 1,600 stocks on the advancing side. What's gaining? Some of the Adani Group stocks are on the upside. So whether it's Adani Enterprises, Adani Ports, all in the green, up about 2 to 3.5%. Post that, Maruti Suzuki, after its parent company has hiked stake marginally in Maruti, so up almost 2% over there. You have Asian Paints, Hindalco, Titan that are well in the green right now. ICICI Bank, Tata Steel. So it's a secular move on the upside, really, led by banks, autos, all the rate sensitives and the metal names that are up in the green. On the downside, Bharti Airtel is down about 2%. So reacting to the news flow there, while Sun Pharma and SBI Life are a couple of other stocks that are also just a tad bit in the red. So it's a good opening. It's a strong opening. 17,200 is back. In the broader markets as well, there are a lot of banks that are moving up. So we will talk about that. But for now, the market opening is decent. Whether it holds on to these levels, time will tell. But remember, the 200 DMA is somewhere around the 17,400 mark. So that is a crucial resistance for the market, for the Nifty, that is. But for now, the start is well in the green.
For me, the most interesting fight between the Bulls and the Bears really is happening on Bharti Airtel today. Pull up both the stocks, Bharti Airtel and Reliance, and that's the point that I was just trying to ask Balaji as well. All up till now, the market's sort of thesis has been that perhaps we're not going to get a price war and the worst of the aggression is over. But Reliance's moves on the postpaid side tell us that it's looking at that segment very, very aggressively, and Bharti is reacting negatively. Of course, analysts are saying no one was expecting Bharti to hike prices in postpaid, but the question is, will Bharti be forced to rework, add more goodies in its plan? Will it look at a tweaking to protect its turf? Because postpaid has been Bharti's turf, and that's one of the big debates in the market as we kick things off this morning. Reliance was up about 1%. Okay, let's move on and talk about some of the other movers and shakers. In terms of stocks and news, a couple of these companies that have gotten orders, RailTel, 3.5% up. PNC Infratech is an L1 bidder for a 1,200 crore rupee project, so 3% up there. Titagarh Wagons is up. Voltas, with the commentary coming in from the management, 2.5% higher. PVR is higher, about 2%. We had lots of management commentary on how the blended entity, PVR Inox, is going to look. There's screen edition plans. Market likes the sound of most of those things. Let's just pull up some of the PSU banks as well. Maybe IOB, Bank of India, because yesterday this is where the cuts were extremely deep. Today there's a lot of recovery. The PSU Bank index itself is up about 1.5%, and some of the constituents are also moving up in tandem. Union Bank, IOB, Bank of India. Most of these stocks have started the day on the positive side. Tex Rail is up 1.5%. By the way, there's a business realignment that has been announced between Tex Rail, some of its subsidiaries, Kalindi Rail. They're looking at a whole business reorientation. So we'll talk about that story as we go forward. Yesterday's listing is doing very well. Devgi Talk about 4.5% up. So there are more gains being piled on. NBCC 4% up. So it's a pretty good-looking screen, actually. Beyond the index as well, there's a lot of stock picking and stock selection going on as of now. And the Nifty is holding quite well around the 17,200 mark.
Yeah, by the way, which is yesterday's high. And, we put that level out, 17,220, which is the level above which the Nifty needs to trade to add some amount of confidence. The high, by the way, is 17,211. And so 9 points short, but almost there. Yesterday, we sold off exactly from those levels. So it's a level to watch. Let's see. Let's hope we are able to cross it, and more importantly, trade for some time above it and not selling off. But this is good. 160 points is what we have now. The Adani Group stocks, as we just put out, are doing a little better as compared to yesterday. Enterprises green, both up 3%. Enterprises sold off about 7-8% yesterday. Voltas, I just highlighted those takeaways from the management meeting, 2.5% higher. PNB Housing is up 3%. PNB Housing was down 10%. So some of these moves that you're seeing is basically reversal of what we saw yesterday. And I think you can say the same thing for Bank of India and a lot of these PSU banks, which sold off 6, 7, 8%. Railtel is up about 4% or so. NBCC is higher by about 3.5%. Yesterday's listing, which of course it looked like it would be a good one, but the market sold off, and so it's up. It's coming up, which is Divji, right? I mean, which is up 4% or so, 629. There is Reliance Infra, IOB, a lot of PSU banks, which basically have been the worst performing part of the market for the last 2 or 3 days, coming back up. I think if you put the Nifty PSU bank index up, you'll see what I'm talking about. Market breadth is very positive. 1650 stocks are higher, and about 200 stocks, less than 200 stocks are lower. So broader markets are in decent form as well. I'll get to more stocks on the downside. There isn't very much backed by volume. So let's welcome in Mihir Vora then, who's with us. He's our Market Master of the Day, Director and Chief Investment Officer at Max Life Insurance. Mihir, great to have you with us here. Thank you very much for your time. How are things looking to you, Mihir? Do you assess there is a period of volatility and sort of indecision here ahead of us before a more clearer kind of trend emerges? Mihir, can you unmute yourself, please?
Sorry, good morning. Certainly, because given the spate of events that happened over the weekend, the markets will take some time to digest all these happenings. I mean, equity markets actually have been a ocean of calm, I would say, compared to what's happening in the bond markets globally. We saw the 2-year bond yield fall from 5% to 4%, and from 4% last night intraday it went to 4.30, 4.40. So it's really dislocated as far as the bond markets are concerned, and that ultimately does have an impact on all asset classes. So I think the next big event to watch is what the Fed does in its stance for inflation, because that will have a big impact on the long-term bond prices, the 30-year bond, the 10-year bond. There is expectation that they might ease off. So short-term, there might be some relief on that front, but that might actually send the long-term bond markets in a tizzy. So a lot of interesting developments, I would say, in this week and next. So markets would probably be in a wait-and-watch mode.
Okay, markets in a wait-and-watch mode. The going is good so far, right? I mean, the market is still holding on to its gains, but does it flatter to deceive? That we will know. For now, it's holding on to the 17,170 markets. Come off a little bit actually from the highs. So the volatility is already kicking in this morning. It's not able to sustain. The high that we hit was 17,211 and it's come off a little bit from that. Mihir, what do you do with the telecom space? I mean, I'm asking you because, that is the space that the hot topic this morning, right? Rel Jio has raised the competitive intensity in the post-paid plans. What do you do here and where do your preferences lie?
For us, it's more of a neutral play because it's looking like a value play, but then it does not look like a very high growth play. So given that it has some exposure to the benchmark, we're more or less staying neutral in the segment, not taking a big call there.
Okay, so neutral on telecom. Mihir, hi, good morning. So we've got this relief rally. For now, I think bulls are taking it with both hands. You tell us, how to negotiate this from here on. Do you think the worst of the noise has died down, or is it too early? We're still running into a big event on the 22nd with the Fed meet. So how do you start sort of deploying your cash hopefully as the uncertainty and the volatility ebbs?
Sure. So I think we need to look at it from an India-centric view, take a step back and maybe cut out some of the global noise. Globally, it's going to be noisy. As we have discussed in the past also, our view is that the Indian economy should be more resilient than the global economy. There is much more pain probably out there in the US and Europe because they are not used to 5% yields, 5% interest rates and 6% inflation. So I think there's going to be a lot of gut-wrenching volatility out there in the markets as well as in the economy. But I think if you step back and look at it from the India point of view, if there is a slowdown or a recession, then we tend to benefit from lower oil prices. we are at inflation, which is, well, above 4%, which is our comfortable, but 6% is not something that we have not seen. We historically run an inflation at 4 to 6%. So we are not in an uncharted territory as far as inflation and interest rates are concerned. And if oil prices come down and we continue to see good domestic demand, rural economy recovery, and the government initiatives, then I think India should be okay, minus, barring massive selling by FIIs, which I don't see happening in the long term.
I wanted your thoughts on the auto space, particularly on electric vehicles, because this theme is now emerging in a big way, right? And a lot of companies, Maruti is getting into EVs in a big way, a lot of auto ancillaries as well. Sona BLW, we saw what's happened with the stock in the last few days. Any thoughts here? Are you raising your allocation towards autos, and this under that overall umbrella, would you prefer EVs?
Yes, in the auto space, we prefer the car space, the four-wheeler space over the two-wheeler space. There's definitely more pent-up demand and traction there. And I've actually, test-driven some of these new EVs, and I'm actually pleasantly surprised at the quality of some of the products out there by the domestic players. So I'd say that the transition is well underway. And frankly, it doesn't matter what they sell, whether it's EV or IC, as long as they make money and margins, we should be fine. But structurally, I think passenger cars and UVs are a good play.
Okay, all right. We'll leave it at that then. Mihir, thanks a lot for joining in and taking us through your view. Okay, just before we end, since you've spoken about autos, any other spaces that you like, anything that we've perhaps missed out on? Because, this is a market, it may be like this for a while, but I guess this is a great hunting ground for long-term value and growth opportunities as well. Apart from autos, anything else that you'd put your money to work in? Maybe not now. You could get levels, cheaper, 5-10%. But what would be in your shopping basket now?
I think it would still be domestic financials and capital goods / defense manufacturing segments. I see government continue to be proactive as far as defense spending, defense indigenization is concerned, and the capex spend on railways and roads, etc. And of course, all this, if the domestic economy continues to do well, then retail credit should also continue to do well, which will be good for the private sector financials. So domestic is the theme to go, I would say.
Okay. By the way, I just want to point out the market is slightly off the highest levels of the morning. 114 now. I mean, we started with this 200-point gap up. And that's a familiar, slightly downward sloping line, right? So let's see how it plays out very, very early. Right now, there are only 1 or 2 Nifty stocks that are down by over 1%. Bharti Airtel is one of them, and then there's SBI Life. Everything else is still positive, but perhaps we need to watch the screen very, very carefully. Okay. So that's the market for the time being.
Just want to mention one stock. I don't know if you guys are excited, but I'm very excited with PVR and the expansion plans that they have. They're planning to add 200 screens every year. This whole concept now is picking up yet again, right? People are starting to get back to theatres, and people are starting to do that every Friday movie watching as well. And PVR has big plans with the merged entity. So there's lots of synergies coming through as well, but there's 200 extra screens, so it's going to be fun.
It's just waiting for better content to come through, really. And going to the movies is.
Do they still have that Friday release, or is now Thursday release? I thought it was Thursday, right? Or
I haven't watched.
I haven't been to the theatres in the longest time, so I guess.
You guys are advocating 200 more screens.
I will let the content come. I think the screens are welcome in any case. But Mihir, great to have you on the show today. Thank you very much for taking out the time. With this, we'll move to our next guest and our next conversation. Lawrence Belanco of CLSA is with us to make sense of all of this volatility and literally the whiplash, the whipsaw moves that we've seen across asset classes and markets. Lawrence, great to have you on the show. Thank you for joining in. I'll start with what I believe was your view for the Nifty back in December of 22. That's when I think for the year you were looking at targets of 20,000 plus. Now, a lot has changed since then. India has underperformed. We've had local issues. We have banks blowing up in the US. We have the Fed going full throttle. Do you still retain that view? Are you expecting 20,000 plus on the Nifty this year?
Well, I mean, we obviously haven't held the break above the 18,300 area. And essentially, if you look at the Nifty, we're back in the trading range that we had from 2021 through to 2022. And that's basically the top end being 18,300. Bottom end being all the way back at 15,400, and we're currently sitting in the middle of that range. So unfortunately, a bit more volatility, but the longer term trend is still intact. And yes, the longer term targets of 20,000 plus are still intact, just that we have to go through more of this volatility in the current range.
Okay, so you're saying your long-term target of 20,000 is intact on the Nifty, but I also heard you briefly mention that the bottom end of this trading range is 15,400. Is that your base case? I mean, you know, we're far from it, and I don't know if we're heading there, but do you think that could be a reasonable assumption over the next couple of months?
Look, we're currently sitting in the middle part of that trading range. So if you look at price action over the past 12 months, you have seen price swings of 15 to 18% within that trading range. Currently, there's this short-term shelf of support by the September 2022 lows, which sit around the 16,800 area, and that's roughly middle part of the range. You know, you would have to think that the S&P would need to break below its support area at 3,800 to have the Nifty trade down to the 15,500 area. At this stage, what we've seen globally is, you know, key support levels have held, and the majority of markets are in these volatile trading range that we've seen develop over the past 6 to 12 months, depending which market you're looking at.
Lawrence, let's talk about the US rates market, right? Yields, especially in the 2-year. We saw massive fall, and that we've seen some rebound overnight. Have we made a top? Is that 5%, a little over 5% the top, which we saw last Wednesday? Because typically, you know, major tops are more distributive in nature, right? I mean, it's a drawn-out affair, and it's not a 100-point fall in 3 days and you're done. What's your sense?
Sure. I mean, it's very rare to get these sort of V-shaped tops in the market. I'd say that the US 2-year yield price action is not as clear as what we've got on the 10-year. You know, the 10 years are far more distinct, with this range between 3% and 4 to 4.3% being the top of the range. But I think the violent sort of reversal that you've seen in the 2-year yield, we're likely now setting up a pretty clear trading range where that 5% has turned into resistance. And you've seen the 2-year, as of last night, rebound off its 200-day moving average, setting up in its newly developed trading range.
So just to reiterate the levels, Lawrence, if you could just revisit, what is the specific Nifty target? 20,000 what exactly? And also if you could just give us your trading range for the US 10-year and for the dollar, just to revisit all the levels on these important parameters.
Yep. So basically, the longer-term target that we have is 20,700 on the Nifty. If we're looking at the US 10-year yield, we basically have support coming through at 3 to 3.25 and resistance at 4 to 4.3. So that's essentially the trading range that you're looking at on the 10-year yield. And if you look at the dollar, you know, we had an important break in reversal late last year. Resistance for the dollar index is the 200-day basically, which sits at the 106 area. And we think ultimately you get a downside target of 95 for the dollar index.
Okay, and back home, you said that the short-term support on the Nifty is the September 2022 lows, which is around 16,800. If we do head there in the near term, do you think the leadership on the downside could yet again be led by banks? What are you looking at on the bank Nifty in the near term?
Yeah, so Bank Nifty on the 200-day, but probably the sector that's most vulnerable here is the auto sector. So we've been flagging this one with the sort of triple top that's developed. And this week we've seen an accelerated move to the downside. So we think autos lead the downside and underperform the bank side. So yes, banks have obviously underperformed year to date essentially, but where we see the most vulnerability is coming from the auto space.
Okay, so you're saying autos are going to lead. Banks in any case have underperformed up until now, but the next leg of the downside will be led by autos. Do you see IT once again get back into the vulnerable spot? Because this month already, you know, some stocks like Infosys, etc., are down about 4-5%. What's your view on the Nifty IT?
Well, Nifty IT is more of a trading range. And if you look at it relative to Nifty, you've actually got some relative outperformance as it's managed to hold that range. So unlike the price action last year where tech led the downside, we're looking at the Nifty IT index, more of a consolidation, and that consolidation pattern is actually giving you some relative outperformance. It is centered around the larger cap names within that IT sector rather than the mid and smaller cap names.
Lawrence, just a few more questions. You said short-term support is 16,800. Below that, if we that would, we're almost there. I mean, yesterday we got to almost there within 100 points of it.
That's right.
So yeah. Below that, where do you see supports coming in? I mean, what kind of downsides open up?
Yeah, unfortunately, it's all the way down to 15,500. So, that's bottom end of the range or the broader range that I've outlined there. So, we're talking about 8% decline where the next major support area comes through at that 15,400 to 15,500 area.
Okay, and so that's around the June lows, right? 15,200 or so was the June low last year.
Yeah, it's the June lows as well as the highs in the first half of 2021.
Yes, yes.
But Lawrence, sorry,
just 1 minute. I just want to clarify. The long term, you said the target is still 2,700. That is still the end of the year, end of this year.
I think it's going to be
when
quite
you said
difficult.
long term?
Yeah, it's going to be quite difficult to get to that target within this calendar year. So, difficult to give you an exact time horizon on that structure because of the depth of the decline and the volatility that we've seen in the current range.
If you were to put timelines to this, what would I mean, to be a little more, would be helpful for viewers when you say, yeah.
Well, I mean, unfortunately, just to put this into perspective, if you want to see the recovery of the 2009 lows, the Nifty rallied 170%. It then spent the next 3.5 years in a trading range before we broke out in early 2014. We've had 130% rise off the 2020 lows. So the duration of this trading range could extend through 2024. It's very difficult to give you an exact sort of time horizon around this. I mean, I think what is quite clear is these defined trading range levels that we do have. And I think the point and what we've been highlighting to clients is it is a more tactical environment, and trading off these levels is what we're looking at as the setup into year end.
Oh, okay. Well, yeah, we were just discussing this yesterday, that long, boring period, just after the global financial crisis where the market was in a big range. But Lawrence, I just want to clarify, you said that 15,500 could be potential downside if 16,800 breaks, but you see that happening only if the S&P breaches which level? You did mention a level, I think, where there could be a correlation.
That's right. So 3,800 is the December lows for the S&Ps. It's essentially what we tested earlier this week, and it's what's been respected. If you did break below that, the next big support area for the S&P is back at its October lows, which is around that 3,500 area.
Okay.
Which is also, I mean, 3,900, a little over 3,900 is where the 200-day, 100-day, etc. also start to come in, right? But is the averages are also now pretty close to where we are because we've spent, the price has not gone anywhere for a long time now, for some time now at least. Lawrence, just one more thing. I think you put out a call on metals, saying that metals have put in a top. And you were, I think, you were referring to an Australian resource index. Does that apply to metals in general overall?
No, so I mean, that's more specific to the Australia mid-cap miners, which is more the lithium names and the nickel names.
Okay. Just wanted to clarify. Got it.
Yep.
Okay, all right. Just one final question from my end. Apart from the stocks or sectors that you spoke about, any thoughts on how one should approach some of these large cap names like Reliance? Because they've seen a lot of pressure this year. Reliance has already underperformed the Nifty. I mean, the Nifty is down about 6%. Reliance has lost over 10% this year already. Do you see further pressure from these heavyweight names?
Well, for Reliance itself, there's quite a bit of support at 2,100 to 2,200. And if I look at my momentum profile for the stock, it does look like momentum is slowing as it approaches the support area. So my base case would be that we should hold that area and, again, remain within the trading range that you've seen over the past 12 months for the stock. But yeah, 21 to 2,200 is pretty critical for the stock, for that level to hold to maintain that trading range structure.
Can you, your main message is be opportunistic and be tactical. That's the market in 2023. Can you identify any trades, specific trades, Lawrence, specific stocks here in India?
I mean, on the stock side, I'm pretty limited on what I can discuss. So it's sort of down to sectors. And like I say, to me, the most vulnerable sector right here is the auto space. You're getting relative outperformance in your IT space. I will be looking at the bank sector for a re-entry point into that, but I'm not seeing the entry point right now on the banks index. But that is something that I would be looking for, some kind of slowing downside momentum to offer an entry point. Otherwise, the clear sort of message here is, sell the autos. That's where the vulnerability is, and tech, at least large cap tech, is giving you some relative outperformance.
Okay, just before we let you go, Lawrence, finally, what do you see on the charts for US equities and bank stocks? What's the base case right now?
Well, I mean, you've seen the regional banks index break down significantly. You've seen the broader, larger cap banks index break key support too. We've got some short-term extremes that we would expect a rebound, but the breakdown levels that you saw earlier this week, that's likely to cap the upside potential. And like I've said, on the S&P, we're basically looking at a 3,800 to 4,100 trading range, and that's basically developed since mid-December.
Okay, we live in uncertain times, right? Thanks a lot, Lawrence, for joining us and giving us an update on the the market as a whole. So that's Lawrence Blanco saying that in the very near term, the short-term support on the Nifty is definitely the September 2022 lows of 16,800. But in the longer term, the 20,000 target on the Nifty is intact. By the way, the market has come off a little bit, so it's losing ground, as you can see, slowly and steadily losing ground, and that's when the volatility generally tends to kick in. So not able to sustain its gains, and sell on rally, something that's playing out yet again. But we'll get back to that big theme, which is the SVB Bank fallout, the failure, and the ramifications it would have on several companies. Sanjeev Bhikchandani of InfoEdge will be joining in to talk about the impact from the SVB collapse on the company. And later we'll connect with Vineet Agarwal of Transport Corp of India and Vikram Suryavanshi of Phillip Capital to discuss